All right, everything looking good. We are live. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8:03 p.m. Eastern Standard Time on April 2nd, 2023. And as always, before we get started, I'd like to remind you this is not financial advice and not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, everything looking good. Somebody let me know in the chat. We're coming through loud and clear. In the meantime, we'll go ahead and get this party started. So we did see the end of our week, end of our month, end of our first quarter as well. So a big close there. So we really want to pay attention to the major indices, Bitcoin, etc., and just jump in, see how those closes looked. Because honestly, we're at the point where things are starting to look structurally sound again. So let's take a look at that. First, we'll look at TNX. So TNX here, just kind of dancing around the 200 exponential and simple. 200 simple is on top. So we know it's losing momentum. But we also have a bunch of green histograms here. We just exited the bearish control zone and got the hard buy signal. So it looks like it's going to try to pick up here and push up higher over the next couple weeks or so. If we flip out to our monthly, we can see the yields have reclaimed the 200 exponential and simple. The 200 exponential has a positive slope. 200 simple is nearly neutral. But we are at or around all four of the moving averages. When we zoom out here and look at the big picture, we've been in this bear trend for literally years. I mean, arguably, depending when you call the trend, even if we say 1990, we're talking about over 30 years in a downtrend. And now we're starting an uptrend. So at some point in time, we're going to come back down and retest the 200 exponential and simple somewhere around 2.6 or so. But when that happens, I expect it to hold as support, as we're now basically flipping this trend to the upside. So what does that really mean? Well, even if it drops down below the 200s, wherever we rally from, wherever we put in our next low, assuming we're going to have a retracement now, which we don't even know, but assuming we do, from that point, that's going to be another higher low. And then we're just looking for further upside. So it really does look like, according to this chart, the monthly chart for TNX, the yield of the 10-year, it really does look like we should expect higher for longer. This looks like the equivalent of a blow off top, but obviously a bottom. What's going on, Magic Internet Money? Good to see you. Let's go is right. So that monthly chart looking good for yields. It looks bullish for yields. So if we jump over here and take a look at the VIX, we close that VIX at the bottom of the range once again, below that yellow support, but we broke through that a bunch of times. It's not nearly as important as it was previously. Even though we do see still some interactions with it, what we're really looking at is the orange descending channel right here, looking for a bottom somewhere around in like the high teens, 16 or 17, something like that. And again, just a temporary bottom as we just continue to interact in this descending channel right here, just bouncing around. When we get near the bottom, it's a good time to sell equities or, buy volatility, or arguably both, or at least hedge. So US oil here, we see bouncing off of that low, off of that target. Finally, that $66. They said we were crazy, but reality proved us right. And now here we see we touch the bottom of the channel here. And look, get ready, okay, because I'm about to pat myself on the back, and you guys can watch it happen in real time. Here we are gapping up from 75 up to 81, touching the area. And of course, where are we at? We're inside squiggle nasty, okay? The squiggly tool, it's obviously, I don't expect you guys to understand how it works. It's extremely elite and very, very technical. But once again, it has worked out perfectly. I mean, there's still a little move to the upside inside the primary squiggle row right here at about 84. But, that's where we would expect at least a short-term top or selling pressure, etc. But more importantly, we have this horizontal right here, and we're back testing that, the heart line of the ascending channel. So again, obviously, we know what the squiggle represents, a cluster of resistance or in some cases support. So there we are. We got the exact bottom, and we don't know if this is going to be the exact top, but the move played out very nicely. And obviously, depending on how you're playing this move exactly, we're talking about a roughly 25% off the lows on oil. So, I'm sure there's going to be some kind of like news article or something like that, and everybody's going to say, oh, that's why it happened. But somehow, randomly, we figured it out with the technicals. I don't know how. Complete coincidence, I guess. I'm sure it has nothing to do with the end of the month, the end of the quarter. I'm sure none of those things are relevant at all. But here we see essentially what that was. The 821 bull cross took place back here at about $46. Coming off that capitulation low, we got very, very bullish. And now here we broke down below the 200s. We back tested the 200 simple perfectly through here multiple times. We wicked down to the 200 exponential once. That was it. We hit our target. We're done. Then we back test the 821. And now the market is going to attempt at this level, right at 80, to stop this 821 cross from happening. So if this bear cross takes place, this flips red, we would expect deeper retrace. What's it going to look like? Are we going to go negative again? Is it just going to go down, another 25%? We don't know. This is the market attempting to stop that boom from happening. If they succeed and they start closing above 80s over the next month or so, it's going to look like basically a nice backtest and continuation of a bull trend. If they lose this area, it's going to look like a deeper retrace. And we don't know what that 821 bear cross is going to look like, but we know every time before we get a massive move, the cross itself is very, very, very important to understand the difference between causation and correlation. So the cause, is the reason something happened, as where correlation just means, hey, when this thing happens, this other thing happens. So we don't know what's going to cause the weakness in the market. There's all kinds of narratives we can spin about demand if we go into a global recession or depression, or the other way around, if we go into a world war and everybody's got to manufacture all these weapons, and there's narratives for everything. We don't know what's going to happen. There's a couple times right here specifically where we got a bull cross and then we barely went up and then it immediately reversed and then we went down. But we know for a fact that whenever this 821 bear cross happens, that always precedes a massive dump. So in this case, the price went down 70% after that cross took place. The cross happens, price goes down 70%. Does not mean the cross caused it to go down 70%. But if we know that before price can ever go down 70%, this cross has to take place, we can at least dodge it. So again, here, you would have said, oh no, it's going to melt down. The cross happens. And then, we only go down 30%. And then we immediately go back up. And then we go down afterwards 50%. So maybe it's not going to go down at all. Maybe it's immediately going to reverse, flip back bullish, and then go back to the upside. So that's what could happen right here. If this cross is bearish, maybe it immediately reverses and goes back to the upside. Well, 100%. But in the meantime, we know that if this cross takes place, that is the riskiest time, because that's the only time we're ever going to see one of these big dumps, one of these 80% downs, one of these 30% downs, one of these 50% downs. Always is going to happen after the 821 bear cross. So we should respect that. So we don't know if that's going to happen for sure, but we know the most dangerous time ever to be involved in an asset or this asset is when that bear cross happens. So it's in the vested interest of the market for the last 1, 2, 3, 4, and now 5th month to try to defend that cross and stop it from happening. If they do not defend it, we'll likely revisit the lows or maybe even go lower. And that's when we'll bust out our drawing tools. We'll get Big Daddy Fibonacci on the chart. We can't even, I don't even think we can do it. Dear God, my brain is malfunctioning. Okay, so we got to get rid of that. We got to remember that we're in crazy auto land. So let's flip that off. Okay. And then we can see how everything looks. And depending where you want to fib from, if it's depending where you're going to go, if it's going to be the wick down to like 0, if you're just going to go from this next wick or the close right there, whatever. But take it from the bottom to the top roughly. And we see, we essentially came down to the 382, back tested the 236. And if we're going to continue to the downside, maybe we're going to come back to a 0.5 at like $50. Maybe that was our bottom around 66. Maybe it's going to be 58. But we have clear areas mapped out for potential targets. We don't know who's going to win right here. The bears and the bulls are going to battle. We'll find out, in a month or so. But in the meantime, this is by far the most dangerous time to be in these markets. So scalp by all means, but just be careful, fully knowing that we can melt back down. All right, so let's look at these major indices. So Dow Jones back on top of the 200s, closed the week out strong. Obviously, we're on the daily, but Let's flip to the monthly. So this is it. Same thing again. We're very close to the 821 bear cross happening, and we're able to essentially rally back up and close back on top of them. So once again, the bulls have saved the market for now. We're getting a hard buy signal. We're seeing some weakness in the histogram here. So definitely getting some conflicting signals. Obviously, the knife nailed the bottom perfectly. It has been absolutely crushing it. Pretty good on those tops as well, and divergence. So Dow Jones looks neutral to me right now. I put up the graphic for the thumbnail and like the whole like sentiment and everything. And I think people have been like zoomed in, just like looking at this right here and paying attention to the sentiment and looking at like the micro moves on like the daily and everything. But I'm looking at this as like the macro. We had a massive low down here in 2008, went on a rip roar rally for, 15 years almost. At this point in time, this looks to me like the top, the retracement, and then we come back up, and there's potential that we're still at that point where like we get the double top and go lower. I think everybody wants to call this a new bull market and get really excited about it and everything, but we have to be really, really careful that this is not going to be a lower high double top type scenario. Because sure, we did see, a 3-month period, a 1 quarter bounce right here, but we just had 3 down quarters in a row, 1 back test up quarter, and then that was our close, was basically neutral. So I don't want to get like overly bullish now on how this is looking, just because we're holding on to support, kind of. This is our weekly, obviously. So Magic Internet Money says, what's your take on crude oil production? Will be reduced from May to the end of 2023. What effect of energy being more expensive have on the DXY markets? Man, honestly, there's just so many variables right now. I don't have any advantage trying to predict what's going to happen with like crude oil supply. I don't have an advantage when it comes to like OPEC. I don't have an advantage when it comes to, refilling or potentially continuing to empty the strategic petroleum reserves. I don't have any advantage on any of that. So for me, it's all, any of those things could happen. It's a complete shot in the dark. It's just like the China reopening trade is going to like drive all this energy demand. I mean, I don't know. I don't see it really right now, but who knows? Maybe it is. It's the narrative is definitely not my thing, especially on that. I don't know what's going to happen with production now till end of year, a year from now, 10 years from now. Could get wild. Who knows? So yeah, that's the Dow. Let's look at the SPY next. So again, nice daily close above the 200s. Momentum in its favor. Still a lower high for now. If we go out to the weekly, staying above the 200s, reclaiming that 821 from the bear cross. And then here's our monthly. Just doing enough. Literally just doing enough. So all that rallying, all the excitement in all of the markets, and it just did enough to not completely look terrible. Now, technically, the bear cross has already happened. Maybe it's going to uncross. Maybe we're going to continue to the upside. We'll wait and see. But we just closed back at that same resistance again. So higher lows at resistance. For me, probability is that we break out back to the upside and potentially test higher. But again, obviously, we're paying attention to that same scenario. We spent a lot of energy on the way down here. We didn't go too deep, decent retracement. Now we're kind of going sideways. Looks like if we continue positive momentum here, there's definitely a strong case to be made that this is going to be our second big thrust up to a lower high, potentially a higher high with divergence, go to new all-time highs, print bearish divergence on the monthly, and then roll over. But we know historically the move that you see after a longer time frame, in particular, a bunch of red histograms and the slope line flips red like this, the move that you see afterwards normally comes up here, and the histogram at least will put in a lower high. Normally this red area will go on for much, much longer for a true retracement. Now we don't know there. We don't know for sure. This was our 2000 high right here. And this was our like retracement. It went on from basically 2000 to 2004. This was our 2008 high right here. Obviously a deep retracement. And it went on from 2008 until a little false right here, but realistically till 2012. So about 4 years again. So this is our top right here, which was 2021. So is it 2025 right now? Did we just have a 4-year retracement? No. Do we have to have one? No, we don't have to have one. Maybe we get something like this. and it goes back up and continues to the upside. But historically, we know something that takes roughly 4 years to play out, a deep, real correction. I mean, are we just right here? Is this where we're at right now? We sell off, come back up, we fight for the 821, and then we go substantially lower? I don't know. I mean, but there's definitely a possibility. I mean, we spent a lot more time fighting for it here. We're trying real hard to reclaim it. We didn't just come up, touch it once, and then go straight down. So, I mean, I don't know. Market's never going to look exactly the same, but it's worth paying attention to the fact that this could be the second thrust up here to a lower high and it rolls over. Now, in the meantime, you know, we'll just stick with the momentum. But it's definitely worth paying attention to. And we know that, obviously the end of the year or the end of a week or a month, but specifically an end of a quarter is oftentimes going to be where we see like a big turning point. Now, oftentimes it'll correspond with the year, though. So like last year, we saw the all-time high was like January 1st, and then we had a rough year last year. So, look out for those like quarterly rebalancing or, take profits or, whatever the situation is. Tend to correspond with like options, expirations, as well as, all these other things that kind of line up. So we had a pretty good first quarter of the year, obviously. So we got to be careful that we're not going to see, a rough second quarter and then maybe an amazing third and fourth quarter. Who knows? So triple Qs here, back above the 200s, both positively sloped right here. Looks pretty good. Go to the weekly, bounced off of the 200s, bouncing back up here. Still lower high for now, but still looking pretty good. Momentum in its favor. We go out to the monthly, still very bearish. Obviously the 821 are still very much bear crossed, but a strong monthly candle right there, breaking through key resistance, breaking through that previous swing right there. Realistically, we'd start talking about another like 10% upside, rounding bottom. So this is it. I mean, there's going to be a bunch of inflation. We're going to go to new all-time highs. Everything's going to get substantially more expensive. You're going to lose buying power, but on paper, the Qs will be at new all-time highs. That's the scenario that this chart or this narrative or this, fundamental situation is betting on. Is that going to be the case? I mean, I don't know. I could see it. If we could come back 2 years from now or a year from now or whatever, and we knew what was already going to happen, and it was one of our two main narratives, and then it played out, like, would we be surprised? No, it's our two most likely scenarios. Either a bunch more inflation going into the future, or just everything's really bad and recession and depression and all that. I don't know. We'll see. It's all up to realistically what the Fed does and how the markets interpret it, honestly. I mean, the economy, sure, I guess it kind of matters too. But so IWM on the daily, still below the 200s, substantially worse, starting to build up some positive momentum. It was trying to shine here a little bit. Still very much below the 200s on the weekly. Still looks absolutely terrible. This looks like basically distribution, markdown, redistribution, before further markdown. I don't know. Maybe not. Maybe I just made that up. I'm sure it's reaccumulation. You don't understand. On the monthly, again, looks just absolutely terrible. Remember the narratives, how quickly they shift too. Because everybody was talking about small cap. It was all about the small caps. It's small caps are going to lead us out. It's going to be small cap growth, small cap value, small cap zombies. It's all small cap. Well, where is it at now? Where's the buying on small caps now? Because this looks terrible. It's by far the worst of our four major indices. On the monthly, this looks horrendous. Sure, we didn't put in a lower low. Congratulations. That's all the niceness we can possibly say. On the monthly, we are still above the 200s, so that's good. Unfortunately, if the 821 stay cross long enough, we're going to retest those 200s. So why does the Russell look so bad? Probably because it is The Walking Dead, if I had to break it down. Okay, let's jump down here to the DXY. So this one's very important. I'm going to do a deep dive on the DXY and all that good stuff at some point in time. But in the meantime, we do still have a higher low for now. It's trying to test back to the upside. One of two things is going to happen. We're going to take out this low right here, and DXY is going to go into a deep retrace down below 100. Maybe not much deeper, or we're going to test back up here and try to hit that 200 simple. I don't know which one of those two things is going to happen first, but that's going to basically cement whatever narrative we have going forward, as we know what's correlated with the DXY and we know what's got an inverse correlation to the DXY. And knowing what the DXY is going to do will let us know, obviously, what's going to happen with those things. So what we see right now is we have exited the bearish control zone, and we are very, very close to the 821 bull cross happening. So let's just look at the last couple times that happened and see what it was. So here we have one. Here we have one. Let's look at those. So this was this one right here. Led to a decent little rally. Nothing too crazy, but it's not insane to think we put in a low right here. We rallied up to 200 exponential, that maybe now we're going to put in that higher low and rally up to 200 simple, which is obviously going to put pressure on, you know, everything that's been rallying inverse to the dollar. Gold, risk on, equities, etc. But what does that mean for the macro? Nothing, because this is still potentially just our A, and then we're inside of a B, and then we could go deeper for a C. So both those situations can happen in either order. But for me, it looks like we push up here, we come down, we put in a higher low potentially, and then we're going to push up here again, and then we're going to top out somewhere around that 200 simple, and then we'll roll over, go lower, have a nice little rip-roaring rally, and then eventually the dollar will bottom and start moving back to the upside. And that's when we'll see the actual like stress on the markets and the real problems and all the stuff that people think already happened or is, you know, about to happen, and they're just wrong about the timing. Because what happened really? Put in a double bottom. We had a rip roar rally on the weekly dollar. We crossed 821 bearish. We had a nice retracement. We back tested. We failed to break back above it. I think we're going to test up one more time, and it's going to fail again. And then I think we're going to come down here and touch the 200 exponential and simple, our long-term targets. You know, lines up with some Fibonacci's as well. Arguably, we could extend it up a little bit to fit that 200 exponential, but somewhere around that level, somewhere slightly below 100, just a itty bitty bit below. Doesn't have to happen, but. And then here we are on the monthly. So we see momentum-wise, bunch of red histograms, hard sell, selling off. We already went from the bullish control zone down to neutral. So we gave up half. So look at this rally. We had a massive rally from the bottom to the top, and then we came down halfway. We came down halfway right here. So realistically, maybe we bounce from this level, maybe we go deeper, but this ascending channel is still the range that we've been, you know, operating inside of. So this goes back to 2008. So we have a 15-year range we've traded inside of. So for me personally, like, I mean, this isn't crazy thinking. I'm not just making up stuff as we go here. You know, it makes sense to trade the range. Because like if you did that for the last 15 years and you just like sold the bottom of the range or sold the top of the range and bought the bottom of the range, you crushed it. So the same way with when we topped out here at the top, some key Fibonacci levels, and also that ascending channel, I think it's a great idea to potentially be looking at like that 95, 94, 96, somewhere around that range down here at the bottom of the channel. And then that also corresponds with 200 exponential, which is slope to the upside, 200 simple, which is slope to the upside. So everybody bearish on the dollar, I mean, is what, brain dead? Confused? Lying? I don't know. I don't know. We've never been bullish on the dollar except for this little period right here. This little period here, we're in a massive run up. And what was going on then? 1980s. So we had the 70s, we had the sustained inflation, we had the 1980s, we had the record rates, we had all that craziness, which sounds a lot like what's happening right now. And during that time, the dollar absolutely rip-roared to the upside. And that was the last time we saw a blue slope on the 200 exponential and simple. So those lost their slope back in 1986. And for the last almost 30 years, they've been negative. We flipped the 200 exponential here for a little bit, lower high, broke down. And then here, you know, arguably when we flipped the 200 exponential bullish again, 2014, the dollar's been an uptrend on top of the 200s, looking strong since then. And it still looks really fucking strong. All it did was break out, and now it's back testing key resistance. Maybe it back tests all the way down to the 200 exponential and still just puts in another higher low. Still bullish as fuck. I don't know how all these people can possibly be bearish on the dollar right now. Be bearish on the dollar here. Be bearish on the dollar here. Be bearish on the dollar. This is the, you know what? I know you guys know this, and I don't mean to ever talk down to you. I mean, unless you enjoy that stuff, then by all means. But realistically, if we look at this chart right here, okay, and we just say like, hey, when is a good time to be bearish on the dollar, and when would be a, you know, decent time to maybe not be bearish on the dollar, possibly even be bullish. Okay, well, let's just use the slope of the 200 exponential and simple. So this whole time was a great time to be bearish on the dollar and to sing the whole narrative about how the world's de-dollarizing and the dollar's trash and nobody wants it and it's going to zero and there's going to be mass poverty in the United States and they've been living below their or above their means and they're taking advantage of everybody and they're mean and they're bad and they're going to pay for all the bad. because we're tired of it. Okay, sure. Have that. Make that your go-to narrative for 30 years. Okay? And you're right. The dollar is going down for 30 years. Leading up to that, though, it was hard to argue that when it was going absolutely parabolic versus, the other portions of the DXY. And then same thing here. When it flips to bullish right here, why would you be bearish right now? This is the time to be bullish. This is it. This is the Paul Volcker moment. That's all everybody talks about. It's all Jerome Powell talks about. Okay, so why is this not about to be the Paul Volcker, dollar goes absolutely parabolic, pure insanity moment? I mean, if this was anything else, if we were looking at any other asset, if this was Bitcoin or XRP or something like that, what would we be doing? We'd be buying support right here, waiting for this thing to go parabolic. We'd be looking to re-enter into our trade right here after taking profits on the blow off top at key support. And where would that support be? Well, probably right around here. Maybe, a Fibonacci, which it's already on there, but I'm just going to slap it on again. Maybe a Fibonacci like right here. What did we do? We came down to 236, got a little bounce. Maybe we're going to the 382. Oh, where's the 382? Oh, it's at the bottom of the channel. The same channel that we're just talking about, how every bit of confluence lines up. It just doesn't make sense to me right now. I mean, I don't care. That's fine. People can be bearish on the dollar. They can say it's going to go to zero. They can say, the US is mean or whatever. I mean, but the charts beg to differ. So we'll see what happens. But I mean, if that didn't sell you on the DXY, nothing will. Okay. All right. So Tesla on the daily, back testing the 200s. I do still fully expect it to hit the 200 simple. It is spending a lot of energy. It is still blue right here. Earnings was just, a non-event. I guess technically they missed by 3.8%. I mean, it's like nothing, 0.027. So looks fine. Looks fine. Still well under the 200s though, and looks substantially worse than something like Microsoft, which is back on top of 200s. Both are sloped to the upside, making new highs. Obviously, it's involved in the AI. So, if you're into that stuff or you believe, maybe not a bad idea. Touching the 618 right now. We have a descending channel. We have an ascending channel right here. We're operating inside that ascending channel. And now we're up at the top of it. So more likely than not, we're going to top out somewhere around the 618. Previous resistance. We'll come back down, put in a higher low somewhere around here, and then continue to the upside until eventually, likely, one of two things going to happen. This is either an A, a B, and then we're going lower for a C, or we're just going to cruise the upside, blue sky breakout, moonshot, Lambos, all that good stuff. Apple, same thing. We're at resistance now. We're at the top of the range. Last time this happened, it was an amazing shorting opportunity. I don't know that's going to be the case this time. Apple, a lot of these big tech stocks have tons of money, cash money on their balance sheet, billions of dollars. So they're not going to get in trouble, even if we do go into a recession or something like that. Some of them, are reliable and not far off their all-time highs. So I think this is part of that fear trade. Apple is basically like tech gold. That's how I look at it anyway. So nobody puts the G in magma like Google does. And Google has been underperforming for a substantial amount of time. And now here it is on top of 200 exponential and simple. Looks like it's ready to get the rest of that move to the upside. I think at some point in time, the 236. This thing's been a big underperformer. People are not allocated to it like they should. They are involved with whatever, AI as well. They've got their little Bard thing going on. So shouldn't sleep on Google. Meta is next, still just ripping back to the upside. We pretty much nailed this thing right here. I feel stupid for not trading it, but you got to draw the line somewhere. There's not a lot of things that are off limits for me. So I think Meta, other than indexes, is not a bad idea. Do have to watch out though for this potential to develop some bearish divergence here. Looks like it's basically just asking for it. It looks pretty toppy actually around this level. And this is once again the 618 from the high to the low. We get an internal retracement of 618. That's an A, that's a B, and then another leg down straight to zero probably. So that would be a failure of the metaverse. And then, honestly, just Facebook falls off a cliff. No one uses Instagram anymore. And TikTok just plants chips in our heads and takes over our brains. Could happen. Amazon carrying up the rear. How's Amazon looking on the daily? Not bad here. So it basically came down to the 886 perfectly, beautifully. I mean, shout out to my boy, the 886. Congratulations on doing something. Actually, it did something on the dollar too. We'll talk about that in the longer video. I'm not going to double back though. But it does look like it wants to break through this level and probably give daddy his nut at 124. So like 24% from here, 20%, something like that. Looks like it wants to go higher. Looks like it wants one more push up. Probably ends up printing some kind of bearish divergence. You know, if we extend this guy out here too, it's kind of a sloppy line because this is just a little like blah. But if we did something along those lines, maybe we pull it down a little and touch it to that last one. I mean, it seems like at least it's going to push up to that 618 at 112 again, if not back to 0.5. So yeah, it looks okay. It looks okay. I mean, you know, and that's a lot of the reason that the major indices actually still look good are because of our spaghetti of drawing tools that are just everywhere. All the colors, all that stuff. That's the only reason they look good. Or no, that's not it. It's because it's like, you know, these big tech stocks in them holding up price. Speaking of holding up price, let's take a look at Bitcoin on the daily. So here's our Bitcoin chart, and honestly, it could go either way. Oh, Magic Internet's Money says, what's up, Eli? Good to see you, brother. OPEC announced today that they cut 1.2 million barrels per day. Oh my gosh, it's insanity. So yeah, I guess OPEC watches the stream and they were like, oh, it looks like oil is getting ready to backtest the 200s. So we'll announce that we cut 1.2 million barrels a day. I don't know, man, because it's all about supply and demand. Like if they cut 1.2 million barrels a day, but supply is down by 1.5, or I'm sorry, demand is down by 1.5, it's still, you know, a relative deficit of, you know, 300,000 barrels. So, I mean, you know, I don't have any kind of inside scoop on anything like that. So whenever I try to use the fundamentals in general, the majority of the time it doesn't work on short to medium time frames. If I use fundamentals on a company, if I go in and look at a company and it looks like trash and they're just burning, you know, hundreds of millions of dollars with no sign of like profits in sight, fundamentals oftentimes will help me say like, no, that's not a good investment. But if I see a company and I say, look, this looks like a good company, it should turn around eventually, it should be profitable eventually, or whatever, it's hard for me to narrow that down. It might be a year from now, it might be 3 or 5 or 10 years from now. So the fundamentals for me, I look for long-term trends, investments purposes, but actual like trading wise, like on short to medium time frames, with the exception of like the big like news article hits and then the move happens, the fundamentals don't really help me at all. Just because I don't have an advantage. Like if I had an insider advantage or something like that, by all means, the fundamentals would probably be awesome. But I don't have any advantages other than technical analysis. So Bitcoin on the daily, we're on top of the 200 exponential and simple. I mean, I shouldn't say that. We have like risk management and like lots of other stuff as well. But like the whole like geopolitics, like worldview, think about how many people told you about like the macro for oil and how it was going to 150. And then what, like who was right when it topped out at, I said 114, it went to 120. And then who was right when it went to 66? Everybody else was calling for 150. So, you know, what was I using the whole time? The technicals. Because the fundamentals will lie to you. Because I believe in a long term, fundamentally, that we need more, you know, oil, more coal, more nat gas for longer. We're nowhere near this renewable future. You know, we don't have the correct metals for it. We don't have like all the infrastructure in place to just do all this stuff. I totally get it. But if you were trading on that, I mean, you're down. You're down 50% or 30%, or maybe you're break even again on oil. You know, or nat gas, you know, is down 80% from its high. Everybody was talking about how nat gas was going to go through the roof and all of Europe was going to die and freeze to death and nobody was going to be able to afford it. Like, sure, the prices went up. Sure, people paid a ton of money. I'm not trying to like desensitize that, but the actual price of nat gas down 80%. So if you just hodled and listened to the narrative about nat gas, you were wrong. I mean, I was telling people, you know, in the middle of the winter last year when they were saying it was going to be the worst winter ever, how there was going to literally be boats full of nat gas just hanging out and nowhere to put it. All the storage was going to be full, and all these stupid European governments, no offense, were going to fill up at the absolute top of the price on nat gas because that's what was causing the price to go up so high. I mean, speculators too, obviously, but a bunch of stupid people trying to time the market. And it just so happens this time, those stupid people were, politicians or, rulers, kings, whatever you want to call them. So, I mean, that's all that I saw happen. But again, if you believe the narrative, man, you could go broke so fast. You'll go broke so fast. You got to, for me at least, you got to use the technicals because they're the only advantage we really have, with the exception of how this all started. So that being said, Bitcoin dominance looking pretty toppy right here. We got to be real careful. Okay, we basically have a top and then a second top. It's starting to look like it wants to pull a little double top right here with a lower high on the histogram. It's only one green tick up right here. Could go either way. But at some point in time, I fully expect Bitcoin to come back down and retest 25K. Now, when it gets there, maybe it gets front run and then it goes higher without hitting 25K. Maybe it goes deeper, comes down to 24, retests this previous little top, which looks almost exactly like what's happening right now. Maybe, I don't know. And then we break down from there. Maybe it comes deeper than this and we hit the 200 exponential. None of that matters. The only thing that matters, and the same thing we said when we bought down here, bought over here, rode it to the upside, bought again down here, rode it to the upside. All we're looking for is higher lows. I don't care where that low is going to be. It could be here. It could be here. Technically, it could be lower than this as long as it's higher than this. But what I'm looking at right now is maybe this is a 1, a 2, a 3, a 4. That's our 5, little blow off top. And now all we're going to do is correct A, B, C, somewhere around here, another higher low. And then we move to the upside. Bull trend resumes, longer time frames, starts looking even more juicier. That's hypothetically what could happen. What happened on the weekly? Well, we had a disgusting weekly, 821 bear cross forever. We've been bullish since it crossed back bullish again. 821 happens. We're back on top of the 200s. This looks good. It looks like we're going to press some of these upside targets. We are in the bullish control zone, which means the bulls are in control, but we did spend an awful lot of energy relative to the last time we were here. This is the last time we were in the bullish control zone, was at the all-time highs. Now we're in the bullish control zone, and we're down roughly 40,000 from that, like 60%. So we're 60% lower, and our energy chart, our fuel tank, is at the same thing. So we have to be really careful that if and when it will eventually roll back over for some kind of correction, short, medium, long term. If and when it rolls back over, though, we have to be very careful that that's not just a macro A, a B, and then a C. Because we know this pattern. We know what this is. This is a pretty clean. This is maybe the cleanest chart I've ever had in all of existence. So let's shake it up a little bit. There's a lot of ways that you can look at this, and you can get way too caught up with counts and Elliott wave and all that stuff, or you can just kind of use it as a vague, rough outline. So today we're just going to use it as a vague, rough outline. That looks like 5 waves down, a correction, 5 waves. That 5 waves could be the end of the correction and that's it, or it could be the end of our first portion of the correction, our first leg, which is the A, and then we're in the middle of the B, and then eventually we put in the C. We don't know, obviously, until hindsight, but if we anticipate both, where would this potentially top at, and then does it eventually go lower, or alternatively, where does this eventually top at short term, and then where does it go lower to before going higher? Because the same way we just looked at that ABC scenario, we could basically look at something like this. This was a little 1, a 2, a 3, a 4, a 5. Assuming it's topped out, maybe it goes a little higher. Maybe it's already finished right now. We don't know. But after that tops out, we know it's going to put in some kind of correction again. We take a little fib from the bottom right here to the top right there. Assuming that will be the top, we're looking for roughly, a 618 correction. Once we get down to that 618, then we have just another 1, potentially a 2, a 3, another higher high, a 4 comes down, finds support around our previous 1, and then eventually the 5. And it could be way more aggressive than that. I mean, the 3 might be retesting the all-time highs, the 4 might be a disgustingly deep retrace, and then the 5 might be 100K. We don't know. But if we get familiar with, the 5 wave and 3 wave correction and the sentiment in the market and moving averages, momentum, all that stuff, we can get some kind of idea where it's headed, and then that helps us create invalidation points, because that's really what it's all about. That's the only reason we're doing technical analysis. We're just looking for a good opportunity to take a trade with a high probability of success and not having to lose too much money before we find out if we're right or wrong. Because eventually we're going to know for sure, hey, are we right or wrong when we take a long or take a short? We're just trying to figure it out in a measured way, a defined way ahead of time. That way we don't just sit around losing money, just, hodling. So that being said, when we look at this monthly chart, we have a bunch of red histograms. We have an 821 bear cross. We reclaimed the 8. We back tested the 21 and reclaimed it right here. We're in the bearish control zone still, but we're very close to getting the bull cross and exiting the bearish control zone. So that is going to be a hard buy signal. The only times we've ever had a hard buy signal was 1 at the bottom of 2015's bear market, 2 at the bottom of 2019's bear market, and then 3, we had a sell buy at the Rona low right here. But that did not ever enter into the bearish control zone. So Bitcoin's 4-year cycle is broken down into, 3, 4 years, 3, 4 years, 3, 4 years. So, technically, like when I say 3, 4 years, I mean like the 4-year cycle is like 3 years of bull, 1 year of correction often, and then the beginning of the next year's bull. So theoretically at this point in time, and we'll see how they're spaced out, bearish control zone, hard buy signal, bull market. Bearish control zone, hard buy signal, bull market. So bearish control zone, very close to the hard buy signal, which on this would be our second, bullish signal. And then after that, potentially the 821 bull cross, bull market, bull market. So that's it. If the 821 bull cross happens right here, we're going to get just one click more bullish. And that's what it's all about. Once we see 2 green histograms, we're bullish. Once we cross over the 0 line, we're 2/3 bullish. Once we cross over the slope line and that flips blue, we're 3 out of 3 bullish. And then I have essentially a line in the sand for each of my indicators, each of my key levels, my fibs, all that stuff, just to find the range and then get a little more bullish as slightly more bullish things happen. It was just like what happened here. The 821, we were bullish to the 200s, and then we take some profits. It goes higher. We reload when it retests. We take it higher again. We sell out right here. We want to buy back in at support again. So even though we were bearish for a deep retrace right here, we were still bullish on longer time frames. And right now, we're definitely still bullish on the daily. As long as we're above the 200 exponential and simple, as long as they have a blue slope, sure, we could get a situation like this where it's a little bit of a fake out. Sure, we could get a situation like this where we go on a little mini bull run and then basically come all the way back down to the lows again, and then we go on the real bull run. Definitely could get any of those situations happen. But if we're not going to trust the system, well, I mean, why have it? And right now, the system says, sure, we're probably going to have a retrace soon, but as long as we stay above the 200s and they're blue, I'm a buyer. I'm buying that retrace again. I'm loading back up. And then I'm hodling it all the way to the moon. What was that? I heard some static. I don't know. Cut out there for a minute. Bitcoin futures chart looks very, very similar at this point in time. A lot of the differences that we had between the spot chart and the futures chart are gone now. What we're really watching on this chart is we have a high and then we have a lower high. We have a high and then a higher high. Same thing on the stochastics as well on the Jewel Thief. So we do have bearish divergence. We could invalidate that bearish divergence. Regardless, when that bearish divergence plays out, maybe we come back down here. Maybe we close the gap at the 200 simple. Maybe we just find support at the 200 exponential. But again, I'm a buyer of that breakdown. And I'm looking for bullish divergence when we do see that happen. Ethereum looks exactly like the Bitcoin chart right now. It's like bearish divergence, still very bullish. Like it just wants to do the exact same thing basically as Bitcoin. So for everybody out there that's like Ethereum is the best, and everybody else like, no, Bitcoin's the best. And then they're like battling each other like really hard. And then just like a big foot steps on them and it's like, they're just equal. And you're both just squashed under the foot. So congratulations. You picked the only 2 decent cryptos probably in existence. So total market cap on the weekly. And I stress the word decent. Okay. They're barely decent. Okay. They're living in the gray area of not total trash for now. So total weekly market cap, we're just at that same level. Nothing has happened. We've been talking about this for weeks. The longer we consolidate at a resistance, the more likely we are to break through it. So in my opinion, the crypto market is about to surge when and if we break through this. Maybe we don't. Maybe we get rejected and the market cap goes to 0 and just all the cryptos are dead. But if not, if we break through this resistance, which we're like basically like at that resistance now, pushing up against it, we're jumping on the trampoline, hitting our head on the ceiling over and over again. Eventually we're going to break through that drywall. And when we do, 52% upside. So depending on how trashy your crypto is or not trashy it is, maybe it goes up 52%, maybe it goes up 75%, maybe it goes up 35%. You got to pick. The worse it is, the more it's going to go up. You know that. So try to find things with names like keywords in their names, like scam coin or moon coin, or things like rocket or nitro fuel, like super aggressive terms that sound, or things like safe moon even. Some people just want to be safe on the way to the moon, okay? They want to get to the moon, but they want to do it safely. Or maybe, rocket nitro fuel moon coin, come rocket is the one for you. But just remember, the worse the coin is, the trashier the crypto is, likely the better your gains are going to be. That's just how crypto works. I know it doesn't make sense, but it is. I wish I was being sarcastic, but that's actually true. That is actually that's the one thing I've ever said that I'm not being sarcastic about. The worse the crypto, the more the gains. So remember that. You got to dig way down. Only the people that are willing to crawl inside the barrel and then get all the way down at the bottom and dig up the super scummy stuff. Only they're going to make the real gains. So it's all about how committed you are. Bitcoin dominance on the weekly. Again, just at resistance. Same thing. Bitcoin took so much from the market. And now, every time we hit the bottom, we went to the top, and then we went back to the bottom, and then we went back to the top, to the bottom, to the top, to the bottom, to the top. So I'm just going to assume that Bitcoin is a weak little bitch, and it's going to give up the market cap back to the altcoins. So get ready for your trash altcoins to outperform Bitcoin. Or not. I don't know. But my guess is that Bitcoin's going to get tired soon, and old Rocket's going to have it stay in the sun or whatever. I say all these cryptos, please don't ever buy any of these trash cryptos I'm talking about. I know they're like real cryptos, or could be, things with like Shiba Inu coins or anything like that. Or if there's a celebrity's name in it, probably not going to be a great crypto. Invest in a statue named after like a celebrity or famous person, not a crypto, please. Actually just do what you want, because it's not financial advice. You're all probably better investors than me, because you go further out the risk curve. So Bitcoin dominance, less stable coins. Again, still very strong. Does not have that same horizontal resistance. It does still have a key resistance level here, but we could see this up at 56. So that just means more money comes out of stable coins and goes into crypto, even though there's more of that money going into shitcoins than going into Bitcoin. So basically, the difference between what goes into Bitcoin and into trash coins has to be less than the amount of crypto that comes out of stable coins into risk on. So I'm sure that helped none. You're welcome. I'm more confused than when we started. Matic on the daily, back testing the 200s, below the 821. Looks weak right now. It looks weak, honestly. It's still way stronger than most cryptos. It's on top of the 200s, so it's already the best crypto. So we did get that move up on BAT. Immediately got the blow off top at that 236 back test. So we back tested the 236. We came in, we put in a higher low. We back tested again, blow off top, trying to reclaim the 200s. If we get back above that 236 at 29 cents, you guys know how I feel, okay? 1, crypto is trash. 2, potential 43% upside right there. 3, basic attention token does actually serve a purpose. I know it's crazy. It's a terrible crypto. You never guess from the chart. This is a beautiful example. You asked about fundamentals earlier. Okay, how many cryptos do you know that serve an actual purpose? No, I'm talking about an actual purpose, not one served by some other crypto or whatever. Basic attention token is a utility token that functions. Look at the chart. It looks like trash. So one of the most functional cryptos has one of the worst charts. So there's your fundamentals right there. So don't ask me about fundamentals, because I don't effing know. If anything, it just proves that fundamentals don't matter. But technically, this thing was looking like trash, and it's starting to actually look decent for the first time in all of history. Since back here. As long as I can remember, this has been complete trash since we topped out, and now it has potential to not be complete trash. So I'm paying attention to what happens right here for potential upside to that 382. Look at this chart. Nice and simple, smooth, just a couple of lines. I like it. They should all look like this. We're deleting everything and starting from scratch. XRP, so we did basically blow off top right here. Took out that previous high, not too bad. Consolidating above some key levels. We got some nice horizontals. The 200 exponential and simple are moving back to the upside. So I don't know. Did XRP win its court case? Is it now a security, but it's okay with it? Is it not a security anymore? I don't know. But I know technically XRP is complete trash for sure. We know that for a fact. But it looks okay right now because it's back above the 200s. So some of these cryptos are going from complete trash to just pretty trashy, which is good. It's up one notch in my book. BNB is next. Still looks strong here above the 200s, but it is very close to that 821 bear cross. Obviously, you guys know how I feel about BNB and CZ and the whole situation. Speaking of trash, we shall see. This thing is still consolidating inside that ascending channel, and as long as it is, I look at it as, you know, resistance at the top, support at the bottom. So if and when we come back down to the bottom, we're talking about somewhere around like 264. I expect support. As long as we're above the 200s, I still expect buying to come in. So realistically, we already hit the 0.5 once. We pretty much tapped it right here. We almost made it to 618 back here, but didn't get there. So bullish target is 408 on BNB, which is like 33% or something like that. TRX Tron. Oh, we just looked at this because of Justin's son getting in trouble. Still very strong. Giant descending triangle. Looks like if it loses this triangle, it's going to melt down and go straight to zero. But in the meantime, I mean, it looks okay. It's the most bearish pattern you could ever have. But it hasn't broken yet. So that is a perfect way to say it. It's the most bearish pattern you could ever possibly have. A giant distribution pattern that looks like complete shit. It just hasn't broken down yet. That's exactly right. So gold XAU. So we got to be real careful with gold. Obviously, we see a big flag pattern right here, consolidating at the top of the range. Everybody's super bullish. There's gold commercials everywhere. Oh, you better load up on gold. The world's going to end soon if you don't have your gold. Gold this, gold that. Don't worry about the premiums. And the guy who's advertising gold to you is the one who's also selling it. He's not selling you your gold, though. His gold, though. He's just buying other people's gold and then giving it to you and taking a cut. Okay. So it makes sense. The salesman wants you to buy the thing that he's selling. Makes sense. Does that mean gold's going to go higher or not go higher? No, I honestly don't know. I think gold looks super neutral right now. We had a giant move to the upside and it's been consolidating for literally years now, and it's at the top of the range. The last time we were at these levels up here, we topped out. We went down to the bottom of the range. So for me, one of two things is going to happen. We're either going to break back down and go back down to the bottom of the range and just continue trading the range, or we're going to break out and go to the upside. So for me, it's really, really easy decision, but obviously I already have some gold. So you want to find out, is gold going to go higher? Well, we're 5.5% away from a blue sky breakout, at which point in time, gold is the highest it's ever been in US dollars. So for me, I'll just wait till we're 5% higher. And then I'll say, oh, this is the highest gold's ever been. I'll buy the breakout. Yeah, that's how I look at it. I mean, we're at basically the area where it's probably going to top out, or a couple percentage away from getting really, really bullish on this thing for like macro years to come, and probably like the death of the fiat currencies. And you're like, I believe in the death of the fiat currencies. Okay, then buy gold. I mean, if you think it's going to happen soon. Monthly, there was a higher high than this. It was a lower high than this. So it gives us no real information. It's basically just a broadening wedge. So we basically have a resistance at the top of the range. We have lower lows at the bottom of the range. So if we go back down to the bottom of the range, I would expect lower lows again. If we break through the previous monthly high, which we basically closed at, I would expect, blue sky breakout. Momentum in its favor. I don't like how this looks. We broke down below the slope line. It did flip red, but then it flipped blue again. We have to be careful we come back up to it and run into it again. Typically when this happens, and it can go back to the upside, typically when this happens, it just means the momentum has run out. The price action just hasn't responded. But I don't think now is a great time to get bearish on gold either. Like, I wouldn't go out and start selling off your gold and you're like, oh, that's it, we're at the top, he said. But, again, I would rather just wait for the confirmation and new blue sky breakout. But you're like, in my currency, it is already blue sky breakouting. Well, then, there you go. Silver, that descending resistance from its all-time highs multiple times. And it's just getting its dick kicked in every time it gets close to the new all-time highs. Or I'm sorry, to this descending resistance. So we're there again. We're at the resistance. It probably tops here. If not, maybe we head back up to like 27, 30 bucks. If we break through 30, maybe it's 50. If we break through 50, maybe it's, 179. But we know before it goes to 179, It's got to go to 25. So let's see what happens. Silver's at 24 right now. You can do it. So Nat Gas had the complete meltdown. We talked about this area and how it has literally operated inside of this yellow box for like 90%, maybe 70% of its life. And now it's back inside the box. It's at the bottom of the box. Could it undershoot the box? Could it go a little lower? Sure. But for me, I mean, this seems like the area where it bottoms. So look out for this massive bullish divergence. It's about to show up in Nat Gas. And it's under $2. And it was 10 not long ago. And there's potentially a massive arbitrage play if you have like, a boat and some like high pressure tanks and a facility and, permits. Please don't arbitrage natural gas from the US80 or Europe. I mean, unless you're equipped for that, in which case reach out to me. Okay. I want to get involved. I want to play in the gas game. NEO is next. So we took a bite at China at the 618 macro retrace. Obviously, you guys got a better entry than I did. I was a little slow to the party at like $9 because I told you I was going to buy it and then I forgot. So unfortunately, I missed out on some gains, but still nice. Still nice little jump up right here. We talked about the late to the party gains. We talked about the potential targets to upside. Still 35% meat on the bone here, potentially 86. Probably just go straight to zero though, because they're losing like $1 billion a year or whatever. Baba, same thing. So we got that little nice entry right here. It did gap up. Obviously that was me fat fingering it. So sorry about that, guys. That's a joke. Bunch of green histograms, the buy, sell, buy, sell, buy signal. One of the most consistent. Then we break out of the bearish control zone. Powerful move to the upside. You guys know what it is. Okay. It's an inverted head and shoulders. We're looking to play up to that neckline, finish out that 40%, and then we're really looking to get paid. Okay. Either the 618, the 786, or the measure move. Looking juicy. All right. So look, here's the thing. We have been getting lucky lately. And the thing about getting lucky is, sure, we're on a multi-year streak of luck. It's not going to last forever. Okay. We can't just get lucky all the time. Technical analysis is obviously a total joke. It's not real. We all know that. We're just drawing lines on a screen, telling our wives that we're working. But in all reality, we're just thinking about tropical islands and super fit women delivering us lots of alcohol. That's what we're doing. We know that. Everybody knows that. But as long as we're putting on the facade and everything, let's just assume that we're not going to get as lucky this next quarter. Okay, I know I've been saying that for a while, but let's just assume Q2 is not going to be good for us. Let's just assume we're going to not do well. And I think that way, if we set our expectations low and then, we do okay, it'll be a nice quarter. So GameStop, I don't know why this one's still on here. All the risks to the downside right now with that giant gap down to $17. And they're like, GameStop made money one quarter ever. And it's like, really? And it's like, yeah, all in. So good investment. Lulu got that gap up. Exact same thing. Okay. Look, this is a legit company. GameStop is a trash company, but the fact of the matter is there is a big air pocket below it. So we'll see what happens. If we consolidate, start moving up, start threatening the highs right here, I'll be a little more bullish on this thing. We are still open for now. Okay. We still have the upside target for now, but probably going to take at least half off the table here just because. I mean, we were thinking this was going to be like a slow grind up. Matter of fact, we thought it was going to be a slow grind up, and it was. We thought that back in December or January of this year. So it was a very slow grind up. It was 3 months of down, almost taking us out of the trade, and then finally a gap up in one day. So it was a very, very slow, painful grind, but we did it. So probably going to take a little off the table here, and then I'll add into strength, but don't love gap ups like that. Maybe it'll be a breakaway gap, though. Who cares? So 3M, this is obviously complete trash. It's the M&M company with the little chocolates and the thin candy shell. Did a little breakdown on this. So did it absolutely bottom? Did we buy to the penny, the absolute bottom on 3M? No, it's probably going to go much lower. It probably go straight to zero. But if you did decide to participate in the trade, oh, look, we're there. It's happening. We're doing it, guys. We're doing it together. I fully expect 3M to be, dear God, where does this go to? 21% is the move we're looking for. So get ready to be underwhelmed with this one. But we did a little video on it. Not terrible. Earnings probably coming up. It's going to go to zero right after that. So make sure you lock in those gains. Speaking of trash that's going to zero, let's take a look at these AI stocks. You guys know how I feel. Microsoft, Google, NVIDIA, C3 AI, aka ticker AI, SoundHound, Sound, BBAI, all of these like narrative AI stocks. I honestly think that's going to be our next big bubble. Is it possible that the rest of the market's put in all-time highs while trash AI goes to all-time highs? Yeah, sure. Is it possible that the rest of the market melts down and we go into depression and somehow AI still continues to perform and goes up hundreds of percent? Yeah, sure. So I think this is going to be our next big bubble. So this thing is down massively. Of course, now it just had like, you know, a ridiculous day. But it's down massively. It's back on top of 200 exponential and simple. You know, we talked about it with like major markets, like indices, Bitcoin, whatever. Once we're back on top of 200s, I mean, it's bullish. That's it. We're back in a bull market. It's like, no, it's if it's up 20% off the bottom. No, it's once it's not down more than 20% off the top. No, it's once Jim Cramer talks about it. No, it's Michael Burry. I don't know. I don't have social media, guys. I can't do all this. So let's just do something. When we see the blue, we're bullish. So I'm bullish. As long as the 821 bull cross, as long as we're above the 200s, we just broke through the 382. So next target is the 0.5. So I'll see you at $44, another 33%. Daddy likes. SoundHound is next. This thing just absolutely exploded to the upside. Basically came back down, retested the 618 beautifully, back tested the 236. I mean, that's it. Shot straight up to the 382. Beautiful, beautiful move right here. This was like almost, what, 40? Yeah, 40-something% in a single day. Congratulations to anyone that watched our trash video on garbage AI stocks. Speaking of garbage AI stocks that are trash, that had a nice move to the upside. Here we have Big Bear AI. This one came down exactly to the 618 as well. We talked about the risk to the downside with that gap. Again, same thing. You know, I don't like big gaps like that to the upside because you can easily have the same move. You don't have all those buyers. You don't have all that price action that took place in the meantime. But we did reclaim that 186 line. Talked about how important that was. We're now back on top of 3 of our 4 major moving averages, getting back above the 200 exponential here at about 293, $3, call it. Big line there. And if we can get there, if we just do the little macro, bottom to top. So we came down to the 0. We shot up almost to the 786. That's insane. Then we came back down. Yeah, this isn't like, there's not a lot here on this orange fib, honestly. Like, we don't see like real clear levels. So I wonder, are they just, is it fibbing off right here? Let's do a little experiment. So that's it. I think that's what the market's seeing. It's seeing it off this previous swing right here. Yeah, I don't know. That's a tough one. There's just too many spots this could be like swinging off of. Probably if we drew out a bunch of them, it's probably a bunch of like the same areas, but it's not like super clean, not like I like it to be. So not the most useful tool right there. And that's going to happen sometimes. Sometimes there's no rhyme or reason. Or maybe we're just fibbing off the wrong spot. Maybe it's one of these. Maybe I didn't go back far enough. I don't know. That's it. So yeah, we'll see. Again, all these things, you know, we talk about the AI bubble and it is scary. You don't want to buy into the top of the bubble or whatever. But like, truthfully, like this was the bubble. The bubble ended in April of 2022. And now we're still right now, right this second, we're down 85%. So we had a bubble, then we had a back test of the bubble, and now we have a higher low. So if we're really going to go in a bubble, I mean, we're down 85%. But things aren't in bubbles when they're down 85%. The bubble has popped. We know that because it's down 85%. All right. And then just looking at these chips a little bit too, some of these trash companies that are definitely going to zero. I mean, complete garbage companies, probably the worst. Like this is like the XRP of the stock market. Just a little refresher on Intel in case you just don't realize how much of a piece of trash this is and why it's just basically borderline like the worst company ever. It topped out here in 2000 and then it put in a lower high recently. It double topped lower high in 2020 and then it double topped lower high again in 2021. Well, this was the first and that was the second. So it's trash. It hasn't put in a new high since 2000. So for the last 23 years, all it ever did was not put in a new high. Now, granted, you know, it melted down a lot and then went up a lot since then, but it still hasn't put in a new all-time high. So until it does, it's complete trash. Now, regardless, in the meantime, though, we talked about some key levels on Intel. And, you know, sometimes we're mean, but this is our old chart, the one from way back when. The last time we talked about Intel, which, I mean, I mentioned a couple times in the group when we got our nut down here. But I mean, it literally did exactly what we said was going to happen. The initial support was yellow. We thought there would be a bounce. There wasn't. Obviously, we didn't buy it because it's trash. Shot down through the 0.5 in green. And now here we are. We hit the blue box. The blue box is like the macro bottom. So we did it. We hit it and then we shot up. And since we hit that box, since we smashed that box in and it's unrecognizable, Intel is up 30%. Is it still complete garbage? Yeah, it is. It's definitely garbage. But they got like some billions from the government. I don't know. I'd be more bullish on this if the government like gave them $1 trillion. Like it's like total peasant shit to give a company like $100 billion. Like that's peasant shit. That's so 2010. Billions. Psh, I don't even get out of bed for billions. If you're not forking out $1 trillion to Intel to build semiconductors, do you even care? Do you really care? Like, which one's more important? Okay, building semiconductors or like $1 trillion? I would say obviously semiconductors. So give Intel their $1 trillion, man. But seriously though, give them their $1 trillion. Might as well. It's on top of the 200s. I mean, this is a trash stock. It's complete garbage. It will never go to a new all-time high ever until it does. And then by all means, I'll admit that I was wrong. But it is on top of the 200s. It did hit our target. It consolidated at the bottom of the range. You could argue that this was accumulation inside of the range and that the breakout of the range now, it's ready to run. So what's it going to do? Maybe a little measure move or something like that. I think realistically at this point in time, we have to admit we were wrong. Okay. It did not find any support right here because it's trash. We underestimated how trashy this is. So it came down lower. And then probably what's going to happen here is now we're just going to get our little bounce. So maybe that was it. Maybe it comes back test the area we thought was going to be support, but turned out nobody cared. Yeah, that actually makes a lot of sense. I think Intel is going to 36. I mean, but it's already there. And then after that, maybe a higher low, maybe a lower low. I don't know. And if you work at Intel and you're like, stop being mean to my company, stop working at trash companies. All right, so AMD is next. So this one's got a little bit more of like a bull case to it. I would say like, you know, as far as like NVIDIA, like, you know, this is like the ugly younger sister or whatever, like tags around. She's like kind of funny though. So you're like, I guess you can hang out with us. That's AMD. So AMD is just the lesser NVIDIA, I would say. But that being said, could be some opportunity here. I mean, we talked about the trade setup. It played out perfectly. Obviously, we got lucky. The luck has run out. The 8-ball has malfunctioned. I drop it. It broke. The little like juice or whatever seeped out. I was trying to clean it back up. I couldn't get it back inside there. I drank some of it. I've been sick for days. Lost my voice completely. So there's no more 8-ball. But if I jump up and down, okay, and then I roll the little thing that was inside, I feel like it's still working. So we'll see. I don't know, guys. So this could be it. This is your final warning. Q2 could be pretty bad. Expect a lot of bad, wrong calls from me. But obviously, you don't listen to any of this anyways. Full on entertainment only. AMD on the daily. So that was it. We got our nut. We're done. What do we do here? Is it going to keep going? It's on top of the 200s. It hit our take profit. It's backtesting the 236. It's also that key resistance in yellow. What do we miss out if this thing just decides to just burst? Another 20%? Yeah, I'm not going to get greedy on this one. I think we need to just sit back and wait for a little retrace. Now, is this like a clean 5 waves right here? Let's look at this. Is this a clean 5 waves here? Or are we reaching on this? Okay. Because what I want to see is that 1. Then I want a 2. Okay. Then the little 3. The 4. We don't want it to rip into the 2 or into the 1 too much. That's kind of a rule. I mean, it's not kind of it is a rule. But this might not even be done. This could still have a little bit of a path. So let's look at this. Let's really break down AMD. So that was a deep retrace, 618, but the wick was almost a 786. Then the second one was a 382, perfect retrace, very, very technical. Chef's kiss, mwah. And then here, we already hit the 236, so it does look pretty toppy. And then what you would expect to happen is everybody's going to be expecting trying to buy the 382 or the 0.5 or whatever. And then in all reality, AM dumps in their mouth and we get either, one of the deeper retraces. So, yeah, I mean, a 382 retrace would just be a back test of 200 exponential and simple. The 236 would just be retesting the 3. Man, what about extension wise? And is this actually legit? See, we're doing it in real time. I know you guys think that TA is just a bunch of fun, but it's not. It's just boring nerd stuff. So 23 on the 1, $23. I'm just measuring the length of the move. 29, so that's fine. So the 3 is longer than the 1. So we have met all of our criterias. Yeah, so that's fine. The 5 doesn't even matter. So this could keep running right here. What about fib extensions? Can we get anything from the fib extension? So from the top of the 1 to the bottom of the 2, we get a 1.382 fib extension for our next wave. From the bottom of the top of the 3 rather to the bottom of the 4. I mean, we're at the 1.618. You guys probably can't see it right here. But that's it. We hit the 1.618. I don't know if you can actually see. There's like a bunch of lines in the same spot. So, yeah, I think that's probably it for now. And then we got to reevaluate. I don't want to get greedy on this thing. So, probably should have been all over this already. But we'll take some profits on the AM deuce trade. All right, that's it. That's it for the agenda. That's all of our stuff to look at today. That was a lot of fun. Did you guys have fun? We just did so much TA. It was just like so awesome. We'll probably coming up on Q2 though. Woo! Get ready, guys. Get ready for the big L's. Okay, make sure to be careful on this Q2. We had a nice little Q1. We obviously had a great start to the year. Been absolutely crushing it. We bought all kinds of random trash, and it outperformed even our wildest of expectations. So going forward, we'll continue buying some good stuff. We'll also continue buying trash. I love that you guys are constantly digging through the garbage, presenting me with all kinds of things that you find in there. Super fun, scraping the bottom of the barrel. But occasionally we find some winners. So let's see what happens here. I don't know what the next big narrative is going to be. I'm not sure exactly what's going to soar or whatever. I know that some of the stuff that's been weak for the last 3 months potentially could be strong, and some of the stuff that's been strong could potentially be weak. But again, everything is very, very close to what I would consider fair value based on 200 moving averages. So if you're buying something at fair value, it's not necessarily bad, but typically we like to sell overvalued stuff and buy undervalued stuff. So we really got to just see where these trends develop. So we'll see you on Wednesday, 8 p.m. Eastern Standard Time for the midweek market update. Going to go ahead and wrap it up there. It is 9:15 Eastern Standard Time on Sunday, April 2nd, 2023. And as always, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Appreciate everybody tuning in today. Everybody had a great week or had a great weekend. Have a great week. And I'll see you guys in the group. I'll see you on the Wednesday stream. And we'll wrap it up there. So everybody have a great night. And I'll catch you on the flip side.